The World Bank today slashed its global growth forecast for 2025, saying that higher tariffs and heightened uncertainty posed a significant headwind for nearly all economies. And the U.S. growth forecast was cut sharply as well. It was cut by nearly 1% from its previous forecast. And joining us now to discuss is Daniel Lacalle, chief economist, Tress's hedge fund, and author of the book Freedom or Equality. So, Daniel, good afternoon to you. Good to see you. What is your view on the World Bank's?
I think that the World Bank is first, it's reacting to estimates of the impact of tariffs that make no sense. You cannot basically expect that tariffs are going to destroy the exporting and the importing economies at the same time in the same way. Absolutely no way. Furthermore, because tariffs are not a novelty, they are the norm in international commerce, no? So I think that it's interesting that the World Bank goes to make this enormous reduction in growth when actually, for example, in 2024, it did not say absolutely anything about a growth that came mostly from enormous levels of government spending and deficit spending. So it comes back to a view that is very, very typical of these multinational entities, in which they make very aggressive assumptions of negative elements when they don't agree with those policies and ignore the accumulation of debt, the accumulation of government spending, and certainly the interventionist measures that we have lived in the past, particularly 8 years. No, so I would not be worried, because ultimately we also have to remember that the World Bank is always making assumptions that very rarely reach the estimates that they have. So I think that what we're likely to see is that probably throughout the next months, that same World Bank will upgrade their estimates, particularly with the United States.
I mean, yeah, you're right. I mean, the stock market is near all-time highs right now, and it seems the U.S. is doing just fine right now, right? Can you comment on the U.S.?
Yeah, absolutely. Think about this. The latest Atlanta Fed estimate for the second quarter GDP is at 3.8%. That is not a recession or something that is going to show any type of the negative elements that the World Bank is assuming. Furthermore, if we look at Goldman Sachs, Morgan Stanley, JP Morgan, all these investment banks that rushed maybe rather quickly to make alarming estimates of recession, are all bringing down their recession estimates to below 30%, i.e., no risk of recession in reality. No, so I think that once clarity on the trade negotiations reaches all these different estimates, what we will likely see is that the levels of growth of the United States are going to be significantly stronger, and particularly when we get the so-called big beautiful bill, which I think is essential to boost confidence, boost also investment, and also very, very important to see an improvement in real wage growth. But for example, we saw today the figures of consumer confidence in the United States has risen above the level at which it was in the average of the 21-24 administration.
So let me ask you on the other side. The World Bank's report suggests maybe a policy shift. What would happen if the U.S., eliminated its tariff policy?
I don't think that the eliminating the tariff policy is something that you should take into account. I think that what you need to take into account is that there will be successful trade negotiations. But if the U.S. Decided to eliminate its trade policy, what we would likely see is that the U.S. economy would show a very important negative effect from the enormous import, which obviously deducts from the GDP figure, and therefore that's what can make the economy actually weaker. It's very important that we reach strong and positive negotiations in these trade deals. These trade deals will be positive for the United States and for the other countries, and therefore all those will radically eliminate a lot of these alleged uncertainties that the World Bank is assuming. So I don't think that it's about eliminating the threat of tariffs, but reaching positive negotiations with these trade deals, which I am 100% sure will happen.
Okay, on that note, let me ask you about trade negotiations that's happening today, and that's between the US and China today. What would you say is the impact of the US and China prolonging or, on the other hand, resolving the trade conflicts? Can you talk about both sides?
Yeah, if the US and China prolonged their trade conflict, it would be devastating for the Chinese economy. We just saw the figures of exports. We just saw how weak the manufacturing and the services sector is, and the enormous problem of working capital. It would also generate some negative headwinds for the US economy, but not as severe as those of the Chinese economy, which radically needs to reach a trade agreement considering the working capital build that is happening in their ports, in their warehouses, etc. Now, if they reach a trade deal, it is going to be hugely positive for both economies. On the one hand, the Chinese economy would alleviate that working capital and overcapacity problem that they face right now. And on the other hand, for the United States, it would be very good in terms of revenues, it would be very good in terms of exports, and it would reduce the enormous trade deficit it has with China. So I think that it's a win win for both. And right now, the negotiations seem to be very challenging, but we need to understand that for the Chinese economy, it's a must. They need a trade deal right now because what we know now is that the famous argument that China can export to any other country that is not the United States and therefore can play hardball, we already know, and the figures are there, that that is not the case.
Okay, we have time about for maybe one more question. So the U.S. Has used tariffs to pressure China, but it looks like it hasn't shifted China's behavior, at least according to Trump. What is your thoughts on that?
Yeah, right now, what we are seeing is a negotiation in real time and very headline driven, no, very much about what we see in the media. However, let's be fairly honest. Those negotiations are going to happen, and there will be punitive measures if the agreements are not followed, and there will be very, very specific measures to at least analyze and make sure that those agreements are reached. But it's very logical. When we have a negotiation, it is very typical to read that nobody wants to negotiate anything and that everything is very, very difficult. And then, like we saw with the UK, like we saw with Saudi Arabia, like we saw with Qatar, it'll happen. But I think that it's going to be very different this time. I think that the US administration is going to be very, very focused on implementing a trade deal that will be monitored almost on a monthly basis, and where any type of, let's say, misalignment or lack of following those agreements will be met with punitive measures.
Well, all right, Daniel, good to see you. Thank you very much for coming on today.
Thank you as well. Thank you.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.